So candlestick were originated in Japan by the traders. This candlestick patterns were being used by the traders to identify how the market behaved the entire day, right? Or in an entire day, or let's say, or the entire week, how did the market behave except of the closing to closing basis? Now, let me just help you out, what exactly I mean. So let's say to draw it, let's say on closing to closing basis, this was the close of the market and the another close was this. Okay, 2 days ka pattern. This is how a line chart will look. Okay, that it is going negative. But what would have happened? Okay, what would have happened on this days, that market would have opened at this level, might be possible, right? Market would have opened at this level, which is negative, and by the time, okay, by the time the market closed, it closed positive, right? Which might happen. But what trader will see? A trader will just see that the price is going down. But logically, if you look, what is happening? The price it opened lower, but it recovered, right? It recovered. So over here, you can say the bulls were more confident, right? So for that purpose, to account, to see how exactly an instrument behaves uh, on an intraday basis, or to see the entire behavior of the instrument, the candlestick patterns were invented, and this was invented by Japanese traders. So how it will look? So there will be two type of candlesticks that you will see. So the first type of candlestick would be a green color candle, and the another would be red color candle. Okay, so not a lot to explain, it is very simple. Let's say a market, okay, let's say the market, it opened, okay, it opened lower, okay, the market opened somewhere over here, and it, let's say, it made a low, okay, it made a low till here. Okay, another thing is, market throughout the day it recovered. Okay, it made a high of something or something like this, and finally when the market closed somewhere over here. Okay, this is when the market closed, and this is how a green candle will get formed. Okay, this is how a green candle will get formed. So now if you just closely observe what is happening, one thing is happening, that market, it is opening at a lower level and it is closing at a higher level. That will tell you that, okay, this is a bullish candle and a green candle will get formed on the chart, which I will show you in some time. So open is smaller, okay, than close. Okay, this is how a green candle will get formed. Okay, so very simple. Now talking about the red candle, and by the way, who are in control over here? The bulls are in control over here, because the market opened here, they pushed the prices all the way till here, and this is where the market closed. Okay, now coming to the second aspect, okay, which is the red color candle, how it will look like. So this is how it will look like. What will happen is, market will open positive. So let me just undo this. Okay, red color. Okay, so let's say this is where the market open, whatever the level is, just understand the concept. Let's say this is where the market open, and then throughout the day what happened is, market made a low, let's say, of this level. Let's say market closed over here, by making a low, let's say market made a low of somewhere over here. Okay, so let's just draw it. Okay, let's say this is where the market made a low, and this is how a red candle will get formed. Okay, so why the red candle is getting formed? Because it opened, okay, it opened at a higher level, but it closed on a lower level, right? So this is how a red candle will be formed. Okay, a negative candle basically will be formed when open is higher than, okay, the close. Who are in control over here? Bears. What did the bear do in throughout this day? What happened? Market opened over here. They pushed the prices lower till this level, and then finally a small recovery came, and this is where the market closed. So who are in control over here? The bears. They are pushing the price lower in the market. So two types of candlestick patterns, or two types of candlesticks that you should at least understand. First thing is green candle. That means the bulls are in control. The positive price action is happening. So let's say this. Okay, what happened? The price opened over here 317.20, and it closed over here 317.59. Okay, so you can do it on any time period. Let's say a daily chart as well. So you can do it on any time period. the logic will remain the same. Wherever you see a red candle, that means this was the opening level, this was the low that the market made, and this was the top that the market made, right? So and this is what you need to understand. Now there would be different type of candlesticks that you would see. So first one is the long green candle. Okay, so the few patterns I am, or few types of candles I am trying to show you. First thing would be a long green candle, okay, wherein the candle's body is very big. So by the way, let me just show you what is the body. So this is the body. Okay, this is the body of the of this particular candle. Okay, this green what I'm drawing, so let me just erase it. Okay, so let's say this is the body, the bar which is getting formed. In simple layman's word, that is our body. Okay, and then the top lines, small lines which are getting formed now, this is our upper wick. Okay, this is our upper wick. Some people also call it shadow, which is fine, but this is the upper wick and this is the lower wick. Okay, so to summarize what this candle is showing you, if somebody can relate me. So what this candle is showing you, that the market opened over here, right? The market opened over here. It made a low, right? And this is where the market closed. This is the high. This is the high of the candle. This is the low of the candle. Okay. And this is the body. This is the upper wick. This is the lower wick. And this is the body, right? So this long green, okay, this long green candle. So whenever you see a big candle getting formed, okay, a very big green color candle getting formed, what does that tell you? That market opened here, they took the market all the way till this level, and finally the market closed over here. That means a big move has happened, a breakout has happened in the market, right? So who is dominant over here? So in this case, the bulls are dominant. Okay. Now coming to the other type of candle pattern, which is completely opposite of it. It is completely opposite of it. Red color. Again, let's say this is the body of the candle. Let's say this is how the body of the candle looks like, and so let's just color it in red. Okay. So let's say this is the body of the candle and these are the wicks. Okay. This is the upper wick. This is the lower wick. Now what happened is, in this zone, right? The market, it opened over here, right? Opened over here, made a high, okay, of here. This is the low that the market made, and this is where the market closed. So the bears, okay, the bears, they pumped the price lower, all the way negative. What is happening over here? The bears, they are dominant, right? They are aggressive. They are pushing the price lower, as low as possible. So whenever you see a big candle getting formed, okay, a big green, it is basically clear that most of the day the bulls are controlling. Whenever you see a big red, that indicates that the bears have controlled the entire day. Now, very simple logic, that if you see a small candle, that means nothing, not a lot happened in the market, right? It was consolidation. Neither bulls were ready to participate, neither bears were ready to participate. A small candle indicates that, okay, not a lot of movement is happening, right? It represents very little movement has happened in the